On your screen, you're currently seeing a diagram which is representing Asia session, London session, and what happens before the Asia session. So we have 3 sections on our Forex chart, 3 sections within the price section, and I'm going to elaborate exactly what you need to know in order to differentiate the difference between inducement, liquidity, and how you can use that in your day-to-day trading. And without further ado, let's do this. So what you need to pay attention to is the Asia session range. At the top, each swing at the top of the Asia session is buy side liquidity. Above these swing highs, there are buy side liquidity. Below the swing lows is sell side liquidity. Okay, what does that mean in layman terms? That just means that at each section, so above the swing highs, there are orders which are being placed by people all around the world. There are orders being placed at these levels. We're just going to represent them like so. Okay, so there are orders at these levels. So now during the London session, so when the London session opens around 8 a.m. GMT, what does the London session do? It usually moves quite impulsively. So let's just say that the market makers have decided that they're going to push the price to the downside. So they already know that they're pushing the price down. They're not just going to push the price down because they need to balance their books. Okay, so what do? They first grab liquidity from the buy side liquidity, Asia high, go and pass inducement into an order block which is going to be at this level. Then they push the price to the downside. So how does that work? So by default here we have inducement. Inducement is an area in the market where buyers and sellers are motivated to place their orders. This area is in the market where they're so obvious that the market makers usually get stop hunted by the London session liquidity moves. These areas in the market usually get stop hunted by the London session moves. So people place their sell orders like so, anticipating the move to the downside. So what then happens? The price moves straight past it, taking everybody who placed their orders out, and then the price moves to the downside. But before it does that, it reaches an order block around this level. So this is the order block which actually pushes the price to the downside. Quick recap. We have New York session, followed by Asia session, followed by London session. Asia session is usually where the price consolidates, the volume reduces. London session is where we get big impulsive breakouts. Okay, but in order for the market makers to justify their moves in the market, they need to first go in a different direction, take out orders, balance their books, and then push the price in the intended direction. Levels like this are very enticing to the market makers because they grab liquidity from this section over here and from this level over here. Now we're off to the road charts. Okay, so I've already marked it out. So around this level, people are placing their buy orders. As you can see, what does the price do during the London session? It goes past this level, taking the people who have placed their orders around here out, and then the price also grabs liquidity from this swing low into this order block, and then the price moves to the upside. So that right there is inducement. Liquidity grab goes past the inducement into an order block, and right there is your smart money trading 101. By the way, if you're finding this video very informative and valuable, make sure you like this video. Let's proceed. So first of all, what do? We focused on the Asia session range. This is it right here in the gray box. All these levels right here, all this price action is New York session. Within the New York session, we have a section right here which we'll call inducement. Once again, inducement is an area in the market where people are going to most likely place their sell or buy orders. In this scenario, it's going to be a sell order. Just like so, people will place their orders here with anticipation to make money at the third price. Okay, so however, right here we have an order block right above it, precisely to the pip. It didn't even go above it at all. So right here, what does the price do around 8 a.m. GMT? The price opens, goes past all the supply zones, which is called inducement, into this order block, and then the price moves to the downside. So this is the handwork of the market makers. In order to fulfill their orders, they need to take out your orders, okay, take out your stop losses, take out the stop losses of the hedge funds and all these institutions. They take them out, and then they push the price into the order block. And once the price is within the order block, you could drop down to a smaller time frame and then take the price to the downside. Take profit is always going to be the Asia low and beyond. So there you have it. Liquidity plus inducement equals smart money. If you could understand this video, make sure you watch it over and over again. Backtest. You're going to drastically improve your trading efficiency. Take care and happy trading. I'll see you guys in the next one. I'm out.